OFX was popping, so been doing a lot of back testing on risk rewards this year. It's been about 2 months that I've been just back testing risk reward every day, just trying to figure out what's the best risk reward for me and my strategy. But I kind of think it applies to everybody. So what I've figured out so far is that it kind of just evens out to be around the same shit. That's kind of what I figured out. So if I'm going to have a, let's do this. If I'm going to have a 1-to-1, right, versus any other risk reward, in the long run, it's kind of going to pan out to be around the same amount of profit in the end. So if I have a 1-to-1 or I have a 1 to 1.5, I mean a 1 to point 0.5, if I have a 1 to 2, if I have a 1 to 3, right? It doesn't really matter. It kind of just pans out to be the same thing no matter what, because these are all inversely correlated in a way to where the lower the risk reward, the higher the win rate. The higher the risk reward, the lower the win rate. So if you're going to have a 90% win rate with this, that's going to turn out to be whatever amount it is. And then if you have a 30%, 35% win rate with this, it's going to even out in the long run to be around the same amount of stuff, the same amount of profit. So what really matters in the end is if you want to win a lot more, but win less when you win, or you want to win a lot less, but win more when you win. Kind of just comes down to a preference. In my preference, I think using 1-to-1s and 1 to 0.5s and around this area is probably going to be the best because you just win so much that it's going to give you a much better psychology approach to day trading versus this. It's like you have the psychology benefit of knowing that you could lose, 2 or 3 or 4 trades in a row and then win one and be in profit. So that's the benefit with that. But the con is that you lose a lot. Benefit with this is that, but then when you lose, you're going to lose double what the profit would be or the same as what the profit would be, but the benefit of this is that you make more than winners than you lose than losers. So that's what it is. That's what I've been back testing. That's what I found out. It just kind of evens out to be around the same amount no matter what. So this right up here is me back testing 1 to 0.5s compared to 1-to-1s. The 1 to 0.5 has a much, much bigger, much, much better win rate. These green ones are where the 1-to-1 would have lost. The blue ones are where they both would have won, and the red is where they both would have lost. So if you see taking the 1 to 0.5, the approach that I've kind of taken with the 1 to 0.5 is the same thing, is where I trade the same way and I have the same entry and take the TP to the next level. But then when you see stuff like this, you see that, okay, well, I'm going to take buys off of this level. But then price could also bounce from here, or it could bounce from here, or it could bounce from here like it did, and then went back up at a profit. 1-to-1, any other risk reward would have lost. Same thing right here. Okay, well, price could have bounced from here where I thought it was, or it could have bounced from here, or it could come down and bounce from here, which is what it did, right? Then you have times like this where it kind of just goes exactly where you thought it was going to go, and it bounces, and that's perfect. Um, but this round right here, it came out more profitable, barely, but it did. And then this last round right here, it came out a little more profitable too. 11-2 versus 8-5, risking 1% to get 1%, 1% to get a 0.5%, came out a little bit more profitable. It's the same thing. And then the benefit that I'm seeing with a 1 to 0.5 is that sometimes the TP, if I am going to be, taking my normal trades and prices going up and whatever, like this, right? And then I'm gonna, price looks like this as it's going up and whatever. And then I want to take buys right here, right? Price is going in an uptrend. I'm going to buy right here, whatever. When I'm going to buy this, if this is, let's say, the level that I want to take profit at, right? Price made a little lower high, and then it came back down to my entry. Cool. I want my stop loss below this because this is the previous level, and I want my TP to be right here. It's going to amount to be about a 1 to 0.5, right? So I could have a 1-to-1 right here. I could have a 1 to 2, a 1 to 4, 3, 4, whatever. The safest, in my opinion, is going to be down here. It's going to be price could bounce from here, or it 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 could bounce from here. So that's the reason why the 1 to 0.5s have such a high win rate, is because you're basically giving it 4 or 5 chances to bounce from the levels below when it's going up, or the levels above when it's going down. So price could bounce from here or here or here and then go all the way back up. You're giving it a big chance to win. Versus you have a 1 to 1 and price chooses to come down and bounce from here and go up, or a 1 to 2 and it doesn't bounce from here, it bounces from here, whatever, right? But in the long run, like I'm saying, it doesn't really make that big of a difference from what I've been backtesting. There's a lot of times when the 1 to 1 will just bounce. There's sometimes when it won't. There's sometimes like this one. This is another example of why this is good, because not only will price sometimes not bounce and go down and then bounce from here and then go up, sometimes price won't go as far as you want it to go. So having a smaller target, a more reasonable target, a lot of times will end up in the TP getting hit, and then price will just completely reverse like it did right here, right? So there's two benefits to having a smaller risk reward like this. The stop loss is big enough and the TP is reasonable enough, and you basically just put the stop loss in a place that's hard to hit and the TP in a place that's very likely to get hit. Basically what you're doing with that. But again, for my back testing, man, I've done a lot of back testing this year so far. Really doesn't make a difference. It all evens out. If you'd have taken 1 to 3s on all of these, it probably would have evened out to be around the same amount of profit. If not, maybe a little more, maybe a little less. But in the course of a year, 2 years, 3 years, it's going to amount to be about the same amount of profit. So then what it comes down to is, do you want to win a lot more but win a lot less when you do win? Do you want to win a lot less but win a lot more when you do win? It's kind of what it comes down to. It's kind of your own preference and psychology. I don't know what I want to do. I know for a fact that when I was doing 1 to 10s, 1 to 3s, I've done all of them. I've done 1 to 0.5s. I'm in a 1 to 0.5 trade right now. I've done as little as that before, and I've done as high as a 1 to 10 before. Can't even get on screen. I've done that before. There was a point when I was only taking those. So I've done all the risk rewards. The one that's consistently giving me the best results was a 1 to 1. But now that I'm back testing this, I'm like, maybe I want to switch. I don't know. I made a video about like a month ago talking about it, but I haven't switched yet. I don't know. But it's like, if these two are this is giving me the best results so far in my trading compared to any other risk reward. But I haven't traded this at all. I took one trade like that today. But if these two are going to amount to be the same thing in the long run, but this is just going to give me more wins overall, and I'm going to have a much higher win rate, wouldn't that be a better psychology trick for me to do? Wouldn't that make me feel a lot better going into trades knowing that I'm probably going to win it? Because I win 90, 85, 90% of the time compared to 60, 70% of the time with this. So I don't know. That's what I'm thinking about. And the trade that I'm in right now with a 1 to 0.5 is right here. So price is going up. Okay. I actually entered the trade right here. I would have entered it right here if I saw it, but I didn't. I saw it when it was right here, so that's where I entered. And my target is right here, this little resistance right here. My stop loss was all the way below. If I would have had a 1 to 1, I would have got stopped. Okay, even if I would have extended my TP up here, and I guess not. Never mind. I wouldn't have got stopped. Yeah, no, I wouldn't. But if I would have entered up here, where it actually would have been, I 100% would have got stopped. And the reason I didn't is because I had my stop loss all the way below. Now it's going back up. It's been fucking around a little bit, but that's that. And then I took 2 other trades. I called out one of them, UJ. I called out on Telegram, and that trade was right here. This stub right here, if you look at price on the daily, it was going up. So I was like, okay, we're going to buy. Cool. Very simplistic. And we had this channel that got broken out of. and it already reacted a little bit last week, but then it was right here when the market opened, so I bought. Buys were right here, target was up here, and then I targeted a 1-to-1, gave it plenty of room to play around if it wanted to, and that was it. That was the trade that was called out this week. Won it, cool, done. And I took one trade, it just hit TP on AUD USD. And this one, price was going down. Boom, 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 going down. Rejected from this daily level, cool. Broke out of this bearish channel, and I did take a 1-to-0.5 on it, just experimenting, just seeing how it is. Took it off of this supply zone right here and sold. Stop loss was above these highs just in case price came up right here. We could bounce from there too, and then price just hit. And that's pretty much it. And now we could probably have a bounce from this level if it does come back up. Probably bounce and then continue all the way down here to the end of the channel. Having a trade like, having a trade like this all the way down here. Stop loss could be up above like that, something like that. And that's it. But those are the two trades I took this week. I haven't taken anything else except GJ, and it's about to be back up in profit, so it's pretty cool. But yeah, that's it, man. That's my opinion. You know, I've back tested for 2 months now, pretty much every day, and that's what I've seen every single time that I back tested, is that it kind of just evens out to be around the same amount of shit. So I wouldn't be surprised if, you know, I don't know if I'm going to stick with 1-to-1s. I don't know if I'm going to do this. I know in the long run, the end is going to be the same, but it's kind of going to be the journey that's going to be a little different. And I feel like the journey would be a little easier with a higher win rate. And, you know, I don't know. I don't really know what to do. I don't know if I should switch or not. I know the profit is probably going to be around the same. I like the simplicity of 1-to-1s, but I also like the win rate of this. So I'm just going to experiment a little bit more, but that's my back testing. I literally been doing this every day for 2 months now, and the results have been that you're going to probably end up with around the same amount of profit no matter what you do, because the win rate goes down as it goes up, and the win rate goes up as it goes down. This is a little extreme. I don't know if I'd recommend doing this, but this and up is pretty good, I would say. But this is also for my strategy and the way that I look at the market. So it might not work for somebody else. For me and my back testing and my strategy, this is what I've seen. I've seen that this works very well. Any of these can work with my strategy. These two I like the most. I love the simplicity of this, and I love the win rate of this. I don't like losing a lot. But that's it, man. That's kind of a week overview at the same time that it was or a weekly recap at the same time that it was a risk to reward breakdown. So that's it, man. OVX out.